FOMC meeting, I've got a regular contract right here called an 818. That's one contract. The other contract is 8/3/2012 635 put that I think that you could bid in over here at $6 and get, or 620. They're 590 by 670. Go 30 of them. The whole market right now on the FOMC meeting knee jerk is that they're trying to prop it. We're making big money on the 640 puts. We're going to add some more to 635 puts. The other put option that I can get is a 620 put 818, which is below the market, and they're still marked down. So what I would say is on this knee-jerk reaction, okay, so we got hit here at 620 on that particular contract. We won't take any real big volume other than what we have there. Now, this is that initial spike down to 631 and it bounces $2. Okay? And the other contract of that 620 put is to be a little bit more disciplined with this one. And we're going to try to get this one at about, $5.20 right here. Okay? Now, that is the initial knee jerk in the contract. Okay, I'm going to put Apple back in here in this FOMC meeting. We're taking a look at how Apple went down to 603 and they bounced them $3 on the FOMC knee jerk. 616, stock went down $13.40, and that Apple put net short is working quite fine. Learn how to trade FOMC meeting. Be patient. Let these things come to you. They have very wide bid and ask. We own these over here on the 640s. Any chance that we can buy around, I'm going to move my target down. Any chance that we can get in here around 750, I'm going to look at now. Okay? And we have people in these right now. So we got people that, we bought a little bit over here on the 635, which is slightly in the money. You can see that knee-jerk reaction off of the bottom in the volatility. Apple already sold down. Google never really went down. It only went down $8 off the high total. Now, they're going to come back with the counter trend, and we got to be careful and let these knee-jerks play their role. Don't feel that you've been left out. How to trade the volatility, how to get back in over here. They were 910, they're 870 by 920. And you can see that they're stealing that premium out of this put still. Because this one is $7 in the money and it's barely at the close of 910. It's not like that these have gotten away from anyone. We bought them down here at $6. And continue to own them. And this is that knee-jerk reaction. You can see where the Apple has made a $5 burn off of that bottom. But it sold down $13 going into it. That's how you play the upside of that $600 call that we bought at $7.50, now trading at $10.10. By $10.40 already, $10.10, I'm going to be selling my profits. I'm selling my profits. I'm getting out of this one here and now. I'm selling into that strength. Oh, yes, I am. They were $17.30 on the high. I'm in there. I'm selling. I'm taking ring that cash register on those calls. Now, back over here. We want to be careful because you're going to have that volatility that's going up, and that's why we're doing this live. Yes, I did not hear anything about QE3, and it was anticipated. They still have that tape in here. So, Mr. Plain, what we will do is we'll go back over to the 640 now that we're getting that upside movement, and we'll start scaling these contracts at 7.5. And then we'll start scaling some more at 720 and 670 over here. Okay? And we'll stay pat with this one here. But once again, sometimes you got to wait for these knee jerks. First they sold it down. Now they're going to pop it up. And they are. And they'll bring these down. And we're going to look to see where that next pop off of that bottom knee-jerk reaction is. That they're always going to take that, run that stuff off of there. It's never like you're going to miss anything. It's just about getting the next best price. So, as far as the knee jerk goes, I'm going to pull these contracts down to right now $7.20. That's my bid. Cancel the 750 and go to 720 on the 640. Once again, knee-jerk reaction in all the stocks. All the big ones sold down and then went right up. So we're going to let the support and resistances play their roles, and that's the FOMC meeting. Didn't hear anything about QE3. Now we're going to see what these markets are made of.